Hey, what's up, guys? Welcome back to Bitcoin and Markets. My name is Ansel Lindner. Going to go over this blog post that I wrote yesterday. Bitcoin gut check. Make sure you guys are subscribed over here on bitcoinandmarkets.com. Again, this came out yesterday, so the charts were current yesterday. We're going to go over the live charts as well here on this video. But just so you guys get the most accurate information, make sure you're subscribed over there, bitcoinandmarkets.com. Like and subscribe here on YouTube or wherever you're listening to this as well. All right, so let's get into this. So just last week, I was talking about Bitcoin breaking containment above 80,000. Price did push a little bit higher, but at the time of writing, it was back down below 79. And uh, pairing that with some macro developments that I'm going to go over as well in this piece, I was starting to experience some major dissonance. And I'm like hypersensitive to this because I have updated my framework multiple times in my career here. I am a trained economist, have experience in the military, and have produced Bitcoin and macro content now for about 10 years. And I've updated from gold bug to Bitcoin to inflationista Bitcoin to deflation Bitcoin. And I also have a mix of fourth turning, secular cycles, deglobalization, deflation, demographic decline. All of those things work into how I connect the dots. And most macro people, from what I've seen, they have the destination. They have either the US empire falling, the dollar falling, some out there goal that they want to get to. They think the sands of history are destined to be a certain way in the future as a resulting goal. So they have this result, and then everything that happens has to be skewed and spun in a way to fit this narrative towards that end goal. I'm the exact opposite. I look at the information today and I say, what is this telling me about the state of the world right now? Using my framework as a predictive tool. If my predictions are off, I need to update my tool. Okay, update my framework. And that is the dissonance. So I'm hypersensitive to this dissonance. It's when my predictions are not directionally correct. Okay. And I've been feeling that over the last week or so, maybe even going into the last 2 weeks. And so I wanted to just write a blatantly honest post about this, look at all these things, and say what could be coming next. So, all right, Bitcoin. Starting on Bitcoin. We were last week breaking out of the cloud, the extended cloud on my extended settings. Back tested it once. We were back testing it again when I was writing, and it looked like it could come down into the cloud and perhaps close into the cloud. And what that would mean is not good. That would be pretty much an edge to edge sort of situation, all the way down to like 70,000. That's the scary part of this chart. However, if we go to the live chart real quick, this is that same cloud. You can see breaking out last week when I was writing, back testing yesterday, bounced right off the top of that cloud, and now we're all the way back up at 81.7. Very strong move here in Bitcoin, bouncing right off of this. All right, back to the blog post. So I did talk about the 200-day moving average last week, and I said that should be a magnet for the price. And there was a bunch of resistance clustered in this 83 to 85 range, which should act as a magnet for price. Price did get very, very close to that at 82.8, but couldn't quite break above that. That's why I say the performance was weak. It didn't quite make it to 83 to 85. It stopped just short. But we were in this pinch. We are in this pinch still between the 200-day and the 20-day, two very important moving averages. 200-day is like a trend. If you're above or below, is bear or bull, pretty much. I mean, you could make that argument for the 50 as well, but 50 is more short term. 20 period is the Bollinger Band middle. And so it's a very important one that's built into a lot of indicators. Well, you can see we bounced off it here and bounced off of it here. Let's take a look at the live chart. All right, live chart here, 200-day, 20-day. You can see we closed just above the 20-day, tapping exactly on the 200-day. Looks like we want to break above it right now, but we'll have to see how this develops. We could squeeze tighter for another day or two. I mean, we're running out of time this week, so I think we're going to make a choice by tomorrow, by the end of this week, by the end of Friday, if we're going up or we're going down. Right now, it looks good that we're going up. Yesterday, it looked good that we were going down. So we are in a decision point right now for sure, really squeezing tight between these moving averages. All right, back to the blog post. So I say that the resolution of this pinch or squeeze between the 20 and the 200 That's going to dictate what happens over the next several weeks. If we break down, so if we fall down under the 20-day, nothing good comes of that. I think we, might as well just wave away the next 4 weeks. It's going to be a long time to get back up to this level, I think. We will struggle for support on the 50-day and probably go all the way down to 70K. That's what I would say if that happens. But if we break upward, price could move very quickly to 85. Again, back to this 83 to 85 range. I think if we do break above the 200-day, we could quickly go to 85 and then continue pushing higher into a real move. So this is the moment. This week, today, tomorrow, maybe the weekend, maybe you could stretch it out into Monday, but it's going to be decided. The squeeze is going to be resolved here soon and dictate what happens over the next 4 weeks. All right. Also, people are extremely bearish. Yesterday, just everywhere I looked, maybe in your feed, if you pause on a tweet, you don't even have to like a tweet, but if you pause on a tweet long enough, where you bring up a chart that was attached to a tweet, you'll start getting fed more like that. And I was just going down this bearish rabbit hole yesterday on Twitter, and it seemed like 90% of the sentiment out there was calling for a new low down to 50 to 60. If that's the case, oh my gosh, guys, overall sentiment is going to be destroyed. Mine especially, but everybody's. I think it's going to be very, very hard on the psychology of broader Bitcoin. Definitely altcoins are going to be destroyed. I mean, they're already pretty much destroyed, but it's going to be very, very hard on people if we do make it this next low, a new low down to 50 and 60. I don't even really want to think about it, to be honest with you. The Clarity Act is working its way through the Senate finally. It did pass out of the subcommittee today after I wrote this. So we might actually get this thing passed. Fundamentally, it's not a Bitcoin bill, but it does a few things like self-custody. The limbo was the bad part. This being in limbo. Yay or nay, yay or nay, yay or nay for 6 months. And it looks like it's going to be at least up for a vote now on the Senate floor, whether that's tomorrow or next week or something. It looks like it will be happening. And is that going to be a sell the news event? Well, we really haven't priced in anything up to this point. Yes, we're off the lows, but we haven't really priced in a big move from the effect of this bill. So I don't think it's going to be a sell the news, but it's possible. I would put it like 49%. 49% that it's going to be sell the news right now. And if that happens, guys, again, we're screwed. We're going to break down. We're going to probably go back down to 70, if not into these lower lows that people are talking about. And that's going to be very, very bad for sentiment, very bad for my mental health. But I might be just writing for Rogue Macro. If you guys don't know, I also write at roguemacro.substack.com. So I might just be writing for them for the next 6 months if this does happen to Bitcoin. I don't. Man, it's right on that knife's edge. It's right on that knife's edge, and I'm going to show some more here coming up. So, bears are comparing this to the 2022 faux breakout. If we look at this chart here, which I'll move my head when it comes time, but you can see back in 2022 in the bear market, it looked like we were breaking out. We were breaking some of these other highs, previous highs, just ticking out above. RSI was breaking back into positive territory above neutral, very similar to today. You can see that does match with the RSI today. However, back today, we're coming off of oversold on the weekly RSI. That was not happening back in January 2022. Also, if I move my big head here, we'll move it to this corner. The MACD is decidedly turned bullish in a big way. This is for the weekly chart again, but that wasn't the case back in January 2022. So there are some surface similarities here, but in reality, that's the setup. The setup is not really that exact. Okay. And I don't have to go to a live chart for that because it's weekly. Moving on to the weekly cloud. They just wanted to compare that back to 2022 as well. And there's some big differences here. It's a completely different setup, really. So back in 2022, you had this thin line here is the lagging span. It was above price, and then it just fell below price right here, right around when this was topping. This came down into the cloud, tested the key June once again, and then fell down. Okay. If we look at today, lagging span has been below price structure for a long time. We're coming from below the cloud into the cloud, and the key June is way up here at 93. So the setup on the cloud, at least, is much, much different than back in 2022. All right. That's that. Now, I did produce this chart. I have talked about this several times now in the last couple of weeks, but I wanted to go over this again. If we bring this up, You see this PMI, Purchasing Managers Index. This is a business cycle type measurement. It goes all the way back to 1948. They've been using this. Up top here is Bitcoin, of course, showing the parabolic moves. Pretty much all the bull markets have been somewhat parabolic, at least, and we didn't really have any of that. It was been a straight channel this whole time on this whole entire move. And it seemed like it was synced up with the PMIs, expanded and contracted with the bull and bear markets for Bitcoin as well. Except this time, there was no expansion in the business cycle. We had a contraction for 36 months, unlike anything in the historical record for the PMIs. This has never happened before in 75 years. And so it was a very weird time. And despite that, Bitcoin trended up. Now, was this just an effect of the ETF and Trump speaking at the conference and the treasury companies launching, loading up? All of these things happened during this time, and price just went up in this channel. Now, that makes a lot of sense to me. We never had a bull market. We never had a parabolic move. But now the business cycle is expanding again. It's not really convincing at 52. I want to see this get up to 55, 60 for this to be really convincing. But when this does, if this does, Bitcoin could put in a parabolic move again, and it could be very, very high. So this is the bull market that we've been waiting for. All right. So that's Bitcoin. Very anxious time. Again, we're sitting on a knife's edge. Which way are we going to or which way is it going to break, up or down? I think it's going to be decided in the next, by the time I publish this, you got 24 hours left in the week, and then maybe it stretches out to Monday, but that pinch on the 20 and the 200 day is getting really tight. All right, let's take a look at some macro stuff that's also adding to this dissonance. So the PPI came out yesterday, the Producer Price Index. It was forecast to be 0.5, which is by itself pretty hot. But it came out at a blistering 1.4% month over month. What a gigantic number. It's one of the biggest numbers since COVID, right? Since this upswing in COVID. I think we might have had like a 1.5 in this up leg right here, but 1.4 is extremely, extremely hot and not looking that good. That puts the year over year at 6, which is crazy. CPI was also hot, but PPI is just at another level. It is approaching COVID level disruption. So COVID, this was a big global economic disruption. Transitory. I said it was going to be transitory, and it was. As you see, up and down. But this is the biggest disruption that we've seen since that time. Obviously, this is coming from the Strait of Hormuz, and it's not just gasoline prices. So fertilizer is one of the things that I've been paying more attention to. Of course, we've heard about fertilizer being very fragile going back many decades, but really highlighted back in 2022 when Russia invaded Ukraine and there was wheat and fertilizer problems, bottlenecks. So they talked about it a lot back then. But now this is a bigger one. I think this really is a bigger one because of the amount of oil, the marginal oil, that instead of, if you're cutting 10% of the oil off out of the global market, is the marginal oil going to go to gasoline, diesel? What is it going to go to? Is it going to go to fertilizers, plastics? Something's going to lose out, and I think it's going to be fertilizer. And so this is really concerning. There's reports now that 8 million acres of wheat is not going to be planted this year, is not going to be harvested. It's going to be the smallest harvest since 1972. And how big is our population compared to that? 70% of farmers in the US have reported that they don't have the required fertilizer. That's big. That's big news. And if it's that bad in the United States, guys, it's much worse elsewhere. Wherever you're living, if you're watching from somewhere outside the United States, it's going to be worse for you. I wonder what your countries are saying. Put it down below. Tell me the news coming out of your guys' agricultural sector. What is it looking like for you guys? Every single major country wants this straight nuisance fixed immediately. Everybody wants it fixed. China wants it fixed. All the Gulf countries, obviously. Europe, the Commonwealth countries. Everybody wants this nuisance fixed immediately, but no other country is willing to do anything about it. It is extremely frustrating sitting here from the American side. America, like I said, we're having these bad effects, but everybody else is going to be worse. Where are they? Where are they? Has it gotten that bad in the Pax Americana that you can't even have one naval vessel come and help? It's reported that India has sent some, Argentina has sent some. I saw some reports that South Korea and Japan were going to send like one ship, but I haven't heard any news reported about that since. Where are they? Have you really gotten that weak that you can't send a single ship? It is embarrassing. I bet this is how Trump feels. Trump feels this is embarrassing, guys. Why should I even care about the strait? I'll just leave it closed. You guys are so weak. Why should we save you? Save yourselves. For crying out loud, people. Do something. Nothing from the French, the Japanese, the South Koreans, the Canadians, the Australians, the Danes, or the Germans. And we've been lectured by these people. And they can't even help themselves. It's like getting lectured by a 12-year-old. And you're like, dude, you're a freaking 12-year-old. You're lecturing a 40-year-old man? That's what it feels like. It feels like these are children, nowhere to be seen. And they're going to get the worst of it. Where are you, people? Core PPE was hot as well. So it's not just food and energy. It's not just wheat, fertilizer, gasoline. This is hit 5.2. Now, this doesn't mean it has to be passed on to consumers. It doesn't. It does not have to be passed on to consumers. But if it's not, if the consumers can't support a higher price, the producers are going to get destroyed. There's going to have to be a massive bailout. So it's not a given that it will get passed on to consumers. And a lot of people think of it this way, like it will, they think it's a guarantee that, oh, if prices for producers go up by 5%, they'll pass that on to consumers. That's like Econ 101, but it doesn't work that way. It's dumb. It's just like the tariffs. The tariffs aren't one to one. They aren't. There's an elasticity to these things. With the tariffs, it was a 1% increase in tariffs led to a 3% decrease in demand for that good. See the elasticity, supply and demand, how it affects it. So if producers raise the price by 5% because their costs raise by 5%, what happens to the demand? If it falls off by 10% or something, is it worth them raising their prices? No, they're going to cut into their margins. They're going to produce at a loss and hope and pray that they can make it through this. So it doesn't have to get passed on to consumers. And I don't think, I mean, some of it will, but probably we're looking at 1-2%, maybe. But the producers are going to eat a lot of this and they're going to get wrecked. All right, moving on here. What do we got? Oil. Oil has not broken down below the 50-day moving average yet, which I thought it would have. You can see 50-day moving average. Today it's about 100, so it's getting close again to that 50-day moving average. We'll see what happens from Trump being in China. There are reports that 6 tankers over the last 24 hours at the time of writing passed through, and now reports I think are up to 60, perhaps as many as 60 in the last 48 hours have gone through. So it looks like either Iran is not enforcing, because they're not Iranian vessels they're getting through. They're coming from Kuwait, Iraq, Saudi, Qatar, UAE. Not coming from Iran that are getting through. So IRGC is letting their guard down here. Either they're purposely doing it or they have been so attrited that they can't keep up the blockade. So that's what we're seeing here. And this is good news for oil prices. We'll see how that affects over the next little while here. US Treasuries, they've been more persistent, persistently high than I thought they were going to. I didn't think they were going to crash necessarily, but I thought they were going to gently continue to slide downward. And that would lead the Fed to gently cut rates here, continue to cut rates. It's not crisis levels like some chicken littles will have you believe, but they are stubbornly high. And remember, high yields mean high growth. At this point, I think it means high nominal growth, and price inflation might, eat into that quite a bit. But there is high growth out there. That's what these high yields mean, growth and inflation expectations. If we pull this up, though, we can see that the 10-year is right around where it was this time last year. Same with the 2-year, right around where it was this time last year. The 3-year is not showing much stress, or 3-month is not showing much stress at all. So again, it's kind of a decision point. Does it break out higher here, or does it level off and start coming down? We are at a decision point here for yields as well. Just like Bitcoin, everything is coming to a decision point, and that's where this dissonance is coming from. They've been stubbornly moving in this direction, and right now they have to make a choice. Are they going to go higher? Is Bitcoin going to fall again on another leg? Something has to break. Right now, something has to be chosen. So let's just summarize. Bitcoin's breakout was weak. The price is already testing support, and it has bounced now. The breakout is still intact, but is not confirmed. Sentiment is extremely bearish. However, indicators are notably different than January 2022, which they're comparing it to in several important ways. At the same time, we're approaching a possible Clarity Act approval or passage of that, which could become a sell the news event. I hope it doesn't. I think it's slightly better chance of getting approved passed than getting. And finally, the global macro situation is uneasy. Inflation pressure, oil, fertilizer, food supply, and stubborn treasury yields are all moving in the wrong direction. This fits with the idea of an intensification before resolution. I'll read that one more time. This fits with the idea of an intensification before resolution. And what do I mean by that? Just like a blow off top, okay? A resolution, but there's going to be, like a climax. There's going to be an intensification before resolution. My base case is that the resolution will be generally positive. I don't think we're heading into Armageddon or anything like that, like some other, you know, adrenaline addicted macro junkies always seem to think, but it's going to be generally positive. There's also a real possibility that the intensification gets worse before it gets better. The fertilizer issue is the most concerning from a humanitarian perspective, of course. For Bitcoin and for markets, shot down. If we break down here, it's going to be very demoralizing. But it doesn't have to happen. Again, we're on this knife's edge, deciding which way we're going to go. The setup is still alive, but it needs to happen soon. And it will happen soon, I think. That's it. Thank you guys for hanging out. Check out bitcoinandmarkets.com. Subscribe, share with all your people. And I'll see you on the next one. Bye.